Payment gateway software versus invoicing platforms. Which one is better for online businesses? Most online business owners assume that payment is just about processing transactions, but here's the surprising truth. Payment gateway software and invoicing platforms tackle very different parts of the revenue process, and choosing the right one can improve cash flow and customer experience. Payment gateway software, like Stripe, PayPal, or Square, enables businesses to securely process online payments in real time. These platforms handle credit cards, digital wallets, and recurring billing while ensuring compliance with security standards. For example, an e-commerce store can use a payment gateway to accept global payments instantly and offer flexible payment options. The strength of these tools lies in speed, security, and customer convenience. Invoicing platforms such as QuickBooks, FreshBooks, or Zoho Invoice focus on generating and sending bills, tracking payment status, and managing accounts receivable. For instance, a freelance designer can use an invoicing platform to issue professional invoices, send automatic reminders, and track overdue payments. These tools excel at organization, record keeping, and ensuring that businesses get paid on time. The key difference is transaction versus documentation. Payment gateways handle the immediate exchange of funds, while invoicing platforms manage billing, follow-ups, and bookkeeping. Most successful online businesses integrate both: a payment gateway to provide a seamless checkout experience, and an invoicing platform to maintain accurate financial records and streamline accounting. The takeaway is simple: if your priority is enabling fast, secure payments, payment gateway software is essential. If your priority is managing billing and ensuring timely collections, invoicing platforms are the better choice. The surprising truth is that combining both systems gives online businesses complete control over revenue, from processing payments to tracking income, boosting efficiency, cash flow, and customer satisfaction.